Okay, guys, so for today, I want to share with you about my fundamental analysis. We use the Benjamin Graham screening. So, the first one is we have to avoid the technology company. Why we don't choose sector of technology? Because from the graphic, we know that it's too volatile, the technology sector, and also from what Benjamin Graham said that technology sector is unpredictable because of the trend. So we have to thinking again about choosing the technological sector. And the second one is we have to see from the sales is you have to have sales and revenue above 340 million, and it depends from the condition in Indonesia. And the the fourth one is long-term debt. So we have to the long-term debt is have to less than the net current asset. So the net current asset you can get from current asset minus current liabilities. The fifth one is about the long-term earning per share growth. So your stocks have to have growth 30%, and then the earning per share you cannot be in negative. So when we choose the stocks, the earning per share you cannot in the negative, and then 30% is the total growth from 10 years. So you have to see it from the total growth of your stocks in 10 years. Okay, so if you want to know is it your stocks is too high price or low price, you can know from the sixth one is the price earning ratio. So the price earning ratio, if it's like above the 15 times, your stocks is too expensive. And if you want to know like exactly your stocks is very high price, is you can calculate with price earning ratio and then the times the price book value. So if it's above 22, it's too expensive. So PBV is price to book value. So you cannot above from 22 times. And then the next one is DER, the debt equity ratio. So you cannot above from 100%. Why? Because they have so many equity or debt. So it's not good for the company and also us as the shareholders. So if it's 100% more, the company it's not that good. Okay, so for the next one is about the return on equity. So the return on equity is represent and about the how powerful the owner's capital. So when you want to buy a stocks, you have to know about the ROE, and then is it the ROE above 20%? Is it good or not? So if it's the ROE, it's more than 20%. You have to see and compare with the others company, and then you have to see the company ROE times to time. So that's all from the return on equity. So we next move on to the dividend yield. So the sector that we gonna share with you is about the dividend yield. So for the last one is about the dividend yield. You have to find the biggest percentage from the dividend. So why is that? Because the dividend is represent is it the company is profitable or not. So you have to find the dividend yield above the 3%. It's already good above the 3%. So your stocks company that you choose is less than 3%. It's not that good. That's all from the Benjamin Graham screening. Thank you. We choose BBCA. So this all the financial analysis is based on the stock bid and also the RTI business. So For the first one is BBCA is not a technology company, so it's very safe to invest in here. And then the sales and revenue is 40,736 billion. So for the current ratio, it's 0.40. And then the next one is the long-term debt. The long-term debt is BBCA don't have the long-term debt, so they have no debt. And the fifth one is the long-term earning per share. So for the earning per share, we have 29.64%. So and the sixth one is the price earning ratio. The price earning ratio is 26.33. And then the next one is the price to book value. The price to book value is 4.88. And then the next one is debt equity ratio. The debt equity ratio is 4.66. And then the return on equity, it's 18.43%. And then the last one is the dividend yield. The dividend yield is 0.40%. Okay, so for the next one is from agro, from the energy sector, not the technology sector, so it's very safe. And then for the sales and revenue is 57,000.8 billion. So, and the next one is the current ratio. The current ratio is 2.45. And then the long-term debt is 22,431 billion. And then the long-term earning per share growth is 50,052.52%. And then the next one is the price earning ratio. The price earning ratio is 2.33. And then the price to book value, it's 1.05. And then the debt earning ratio is 64.58%. And then the return on equity, it's 43.79%. And then the last one is the dividend yield. The dividend yield is 8.66%. So because of the duration cannot so long, so we're gonna give you the data, the other three company data. So you can pause it when you want to save the data. So here is it. Thank you. So we choose BBCA in our portfolio for the baseline. So the stock of BBCA will be save our money if other stocks going down. So the BBCA that have a previous trend is our uptrend, and we have an opportunity that I will explain in the technical analysis. The BBCA have opportunity for our entry the emittance, and we still see the BBCA in the uptrend. Even now the BBCA is high of price, and we get the Adaro for acceleration stocks. So we hope, or we trust, we can get the presentation, high presentation from Adaro, because now Adaro in lowest in the support. So the price is really efficient to entry. Trend is gonna be reversal before downtrend and going to the uptrend. And we support the Adaro with the Pegas and Inco. So they are is in same sector. So if Adaro going in the uptrend, Pegas and Inco gonna be follow the Adaro, because I think the sentiment of the market is going bigger in the Adaro. So market gonna be see and find the familiar stocks same like Adaro. So they will pay stocks like Pegas, Antam, Inco, like that. And we add the fortune cookie
stocks, like our lucky stocks in the portfolio. So it's have a risky of stocks, but it's still in the uptrend. We choose wood, and for the baseline was, I say, the BBCA we put 300 million, and the Adaro we put 350 billion, and other money we put in the wood, gas, and income. So I will talking about the IHSG yesterday in Monday. The IHSG is closed at the 20 HEMA limit, and there was another forecast in the minor up channel to form two doji star candles, indicating a corrections would occur, and that is really happen in the Tuesday. There are corrections, and the third doji star candle is from if there is market have a sentiment like negative. It depends on the market sentiment, but apparently there was only a slight correction today, but in fact the movement of IHSG is still in the bullish consolidation, because yesterday also the IHSG was recorded as experiencing a net foreign buy of around 37.5 and 0.6 billion, with year-to-date performance in the range of 0.64%. And if we see in this chart, have a support in 6,320. So the corrections gonna be pullback or rebound, or maybe just false break happen, then continue the bullish pattern consolidation. So the IHSG is still efficient for invest or entry the market. Then the BBCA, as we see right here, the BBCA is still in the uptrend, and there is a gap of big buying in the market. So and the volume of a buy is bigger than the volume of the sell. So we trust the BBCA gonna be continue the uptrend and will save our money. Then the golden cross that will change the trend still far in this indicator of the chart. And wood still in the uptrend line. The volume of buy is bigger than the volume of sales, so it's gonna be continue the trend, sound like a BBCA. And Inco have a really strong support right here in the line. So the gonna be happen is just a false break right here, and this is the first movement of the uptrend of Inco, because in the previous movement Inco never break the support line here. Then the Adaro is in the same like the Inco, is still in the support line, really nearing the support line. So Adaro, it's possible not break the support line. So here is have a indication for continue the uptrend and change the before pattern, the downtrend to the uptrend here. Then the Pegas is made a signal pattern of a ascending triangle. That means is have a resistance still gonna be constant, but the volume of buy is really big, but the trend like pausing. The market not yet got the positive sentiment, so we just wait for the Pegas for get a big uptrend, forget the big explosive of uptrend movement. And really near to the golden cross right here, the support still higher than before, and we just need the timing, the moment for explosive. and change the pattern, because the signal of ascending triangle is a reversal pattern. And maybe this is enough for the technical analysis, and I hope the information that I give is clear, and thank you for your attention.
Indonesia recorded a solid account surplus of 4.3 billion US dollars in the fourth quarter of 2022, supported by the solid good accounts of 17 billion US dollars. And to add to that, there's an increase of secondary income surplus, exactly 1.9 billion US dollars. For the full year 2022, the current account balance recorded a significant higher surplus of 13.2 billion US dollars, largely supported by non-oil and gas exports, and Indonesia's financial account deficit narrowed significantly to 0.5 billion US dollars, driven by the narrowing deficit portfolio investments and the financial account balance turned deficit of 8.1 billion US dollars. Now there's a surplus of balance of payments, 4.7 billion US dollars, because of the solid current account balance. However, the full year current POP is significantly lower, surplus at 4 billion US dollars. And there's an expectation of higher currency volatility in short term, driven by the tightening from the Fed and expectations to pause the Fed's policy rate hike. January 31st, 2023, China's NBS PMI has reached an expansive rate of 50.1, followed by Indonesia's PMI manufacturing has reached 50.9. And since China is one of the biggest industrial economy, there is a high demand of copper and nickel.